So 2.2% revision, how does that sit for you, Megan?
Yeah, that's pretty much what in line with expectations. I mean, this is the second revision. We had that horrible retail sales figure in December. We've had a deterioration in some of the trade data, so we expected a slightly softer GDP figure. Whether this brings us under, 3% or not, it doesn't really matter. That's mainly just a chit on which, the president's trying to get points, but it doesn't really matter.
Tom, from your perspective, as you look at this data, I'm trying to figure out inflation. We're still seeing very muted price increases across the board. This confirms that, even if it did come in slightly stronger. From the U.S. equity standpoint, do you think that where we are is sort of a sweet spot, or do you see this sort of low inflation as possibly becoming an issue?
Well, I think we're still in a sweet spot. And I think Megan mentioned earlier that the tail risk is deflation. And PCE going up a little bit, but not too much, it really is a Goldilocks scenario. The low inflation kind of gives the Fed reason to pause for a much more extended period of time. And the fact that there's still a little bit of inflation is positive. You still have very low unemployment. The economy not robust, but moving forward. So, yeah, it is a little bit of a sweet spot, and that it argues that multiples should be higher in this interest rate environment.